Okay, I hope everyone's doing well. Having some recording issues, but I think I fixed it. So I'm gonna be making shorter videos much more frequently, hopefully multiple videos a day. So just be continuously looking at the YouTube channel. Um, and they're just gonna range from different topics, trading related. So first and foremost, let's get a few ground things to cover. I always primarily speak on always in. I will throw in a few tidbits here and there, but primarily it's about always in trading. If you don't know what that is, you need to study Al. I Everything I talk about, I pretty much learned 99.9% of it from Al. So I expect the listeners and the viewers to know Al's basic concepts. So coming into the day, we had a big gap up, as you can see over here. And when you have a gap that's, see if I can do it like this. So when you have a gap that looks like this, really big, first thing you expect is a pullback, at least to the moving average. Bar one, it's always in short below bar one. Traders will sell below it. Bar two, good bar. However, the gap's huge though. I mean, it's a pretty big gap. It's a 20-point gap, if not more. So bar two, bar three, tail, 50-50 chance you get an opening reversal. So, well, 80% chance you get a minor reversal, 50-50 chance you get a major reversal. Bar three, big tail. Some traders will get out a few ticks above. Other traders may expect a deep pullback and a second leg down. When you get a bar like this, if you didn't get out, a couple ticks above the bar, I don't know, you can get out here. The only issue you face is there's sellers up here, and no one really knows if they're here or if they're here. But yeah, you could certainly make an argument. Maybe you get out above the bar, doesn't trigger, and again, it's you can. If you did, you'd probably get short again below this bar. Second entry short. 20% chance bar one is the low or high of the day. So again, still always in short. Traders will sell. Stop up here or here. Tight trading range. No reason for bears to get out above. Big bear bar. A little bit of a surprise, but disappointing tail. So some traders will get out down here. Others will wait for the follow through. And some traders will just exit. If you're trading always in, you probably wait. Not a good enough reason to buy, but some bears will get out above the bar. It didn't trigger. Low one short, but it looks like a leg in a trading range. 2 legs down, maybe a wedge, 1, 2, possibly 3. After a gap up in what's likely going to be a trading range day, so a lot of bears will sell below this bar. One thing you have to remember with trading is, your risk is your risk. So if you sold, even if you sold the low of this bar and price is now down here, this is, sure, you can call this profit, but it's still risk. I mean, if I sell and put a stop up here, now price is down all the way down here, and I put my stop to break even, and price stops me out over here, I lost however many points this was. I didn't have a break even trade. I still lost money. So if I wasn't out, I'd get out above the bar. It's micro double bottom at the moving average. I don't know if we clearly went always in short. We did if you ignore the gap, but after a big gap up, we could easily still be always in long. So bears get out, bulls get in. You can notice traders sold the close, disappointed, got out at the low of the bar. Consecutive bull bars, 4 in a row. A lot of overlap. Where's this? We need, the bodies aren't big, the gaps are closing, fairly disappointing. Big bear bar, but no reason to get out. Here, second entry short. Probably get a deep pullback. So, not really a great major trend reversal. What do traders do? Aggressive bears might go short, but it's not a great trade. It's a tight channel. Bulls will get out. Some bears sold this high. They sold somewhere in here, and they'll bet that they can scale in. Other bears sold down here, betting they could sell more higher. I think we'll go to here. We may have a fairly deep pullback. I think we'll go somewhere down here, maybe here. 3 bear bars, but not enough to clearly say it's back to always in short. possible head and shoulders, bottom, left shoulder, head, right shoulder. All that really means is bear trend, pull back. We have a new low of the day, a strong enough rally that we got a higher low instead of a new low. But again, bulls really want some sort of spike pullback channel. And, again, more difficult trading. If bear got out, if bulls get out below the bar, not a very clear reason to enter again, but they kind of have to. So, still always in long. What do they do up here? Probably can wait for a few bars to go sideways. Other traders will get out at the moving average. I'd probably get out. 3 pushes up, 1, 2, 3. It's a wedge, 1, 2, and 3, or 1, 2, 3. It's a double top. But either way, you don't have to get out right there. If I didn't get out below the bar, I'd probably get out below here, second entry short. And now we're just going sideways. One moment. So, still going side. Again, I'd be out. I wouldn't buy again above here. Maybe you buy somewhere down here, but really not that clear. Do you buy here? I don't know. Maybe 2 legs up, double top. Some bulls will buy there, but really not great. Case in point, it's a pretty tight. It's tight. It's your trading range, and you're at the highs. So I would not get upset about missing this. Personally, I just let it go. It may not be that easy of trading, but again, it's always in short. Traders don't have to get out, and some will just take a chance. Strong enough breakout, bad follow through, probably get a second leg up, bad follow through. If you were long, and now you get something like this, a lot of traders will keep kind of adjusting the scaling to what I like. So some traders know it's a tight enough channel, you'll need a micro double top. So the first reversal down will probably fail. Traders will sell more higher, like so. Betting you can get out of break even. Other traders will wait to sell below the second entry, but fairly tight channel. Haven't really gone much below the moving average. So even if you sell here, stop up here. If you see this, a lot of traders make it out of break even and just go sideways for the rest of the day. So one thing I like to do is sometimes look at a 15-minute chart. Okay, we had a big gap up, bear bar, bull bar, a few bear bars down. Look how tight this is. It's just, ever since even over here, just very difficult from 13.15 all the way down to 4.30 or 14.30. So that would be from here, 13.15 all the way to 4.30 over here. So really tight channel. Look how big the pullbacks are. The high of this, this bar is, let's just say this bar is 2 points, okay? The pullback below this bar, if I go to 3 even, it needs to go to what? 0.75? It's not even a 2 point. It's not even a 2 point pullback. Excuse me, 1 even. Yeah, it's not even a 2 point pullback. So the deepest pullback over here is barely 2 points. That's a very tight channel. So, and then Tesla. Overall, consecutive gap ups, multiple gap ups. We, gapped up sideways, gapped up, rallied, even bigger gap up, very parabolic. It's gone obviously a lot recently. It's probably the most interesting stock overall right now. Here's a daily chart. Gapped up, rallied really high, almost got to 1,000, immediately sold off. It's just not sustainable, and everybody knows it. It's kind of it's similar. It makes me think a lot of like Microsoft, or whoops, that is not it. There we go. Makes me think like if it'd be kind of like if Microsoft just went straight up instead of slowly gone up. Same thing with Domino's. All right, quick, come here, stop. So anyways, thanks for watching.